Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. I am here with Jesse Lou Ernsting of G Mining Ventures. G Mining has almost completed their Tocantinzinho mine in Brazil, and they have recently acquired Merian Gold in Guyana. Jesse, thank you for your time, and thank you for your efforts on behalf of shareholders such as myself and the viewers watching this show.
Thank you for having me here.
Yes. Go ahead and start by telling us a bit of your background and how you got started with G Mining.
Sure. I actually started my career in consulting engineering, doing capital projects in the mining and milling arena for over 5 years, and pivoted to mining, capital markets and finance and strategy after doing my MBA. And I had the opportunity to work for Resource Capital Funds, which is at the time the largest private equity fund in the mining space for over 5 years again. And then over the last 5 or more years, I've been on the issuer side, working in corporate development and investor relations.
Okay. And so with the Gignac family, so this deposit that this project that they've just about finished down in Brazil, they're almost complete, probably a few weeks from pouring, correct? Mm-hmm. Go ahead and tell us specifically about this project down there.
Yeah, sure. Tocantinzinho was actually previously an Eldorado Gold project, and the G Mining Ventures group acquired it from Eldorado in 2021 for a top-line price tag of $115 million, and this is American dollars. And at the time, we paid $20 million in cash and gave Eldorado a 20% ownership in the company, as they wanted to continue their exposure to this, very prospective area and this high promise project. And also, we will pay them a $60 million cash payment 1 year after commercial production.
Okay. And describe the, how can I say it? So
the project itself?
Yeah, the project itself and how it's similar to other projects that the Gignac family has.
Yeah, sure. So Tocantinzinho is in northwestern Brazil in the Pará state. And it already hosts, when we acquired the project, it already hosts over 2 million ounces of reserves in proven probable categories, over 1.3 grams per ton. So, and it's open pitable. It comes right to surface. So it's a very, amenable to open pit mining. And so it's a type of deposit that the principals of G Mining has had a lot of experience developing previously for other mining companies such as Newmont and IM Gold, and then also Lundin Gold. And a lot of those projects, such as Merian for Newmont, Fruta del Norte for Lundin, and Roosevelt for IM Gold, were all in high rainfall, high forest coverage, tropical environments, and especially in a region called the Guyana Shield. So very similar location to Tocantinzinho. So we were able to deliver those projects on time and on, or even in some cases below budget. So we felt like we were the ideal group to pursue the development of Tocantinzinho, or we'll call it TZ for short. And then actually, fast forward to the deal that was just announced in April, and we're looking to close it any day now, on or about July 15th. The Oko West Project from Merian Gold is also located on the Guyana Shield. So, we feel like we're the ideal team to move, to apply our expertise, our team, our, construction equipment to this new project, and hopefully also bring it in on time and on budget for our shareholders.
Okay, so the Gignac family has experience in tropical, high rainfall. I mean, in some of these places, it's raining 6 to 8 feet a year, right? Mining in the mud is hard. It's not easy, right?
Yeah,
but they have experience with Fruta del Norte from the Lundin family. They have experience from the Merian deposit with Newmont in very similar terrains.
Yeah.
And we've just acquired Reunion, which is kind of the same playbook, right? So we have a successful family here that has done this in very similar terrain, very similar environments. They're just about to complete it now. And we've just bought Reunion Gold, which is another very similar project, right?
Yeah, exactly. So it, really we just, you see sort of the value of the company appreciating along the way, along the development path of TZ. And so we feel like it's been a winning formula for us, first for other mining companies and, helping them build projects successfully. And TZ was really the first project that the Gignac family has, owned and developed as owners within G Mining Ventures. And it's sort of, I would like to say maybe it's a bit of a test case, to demonstrate that we can apply this formula to our own, own asset and sort of bring it up the Lassonde curve of value creation. And so now we will rinse and repeat and do it again with Oko West.
Okay. Yeah, rinse and repeat. Got it from Reunion Gold. Okay, so let's go over some of the numbers. Market cap, debt, cash, enterprise value.
Yeah, sure. Now I have to speak in Canadian dollars because our main exchange is on the Toronto Stock Exchange, TSX. So in Canadian dollars term, we are about 900 million market cap today, and about 100 million debt outstanding. That's to Caterpillar and one of our largest financial partners in Franco-Nevada. And so that makes our enterprise value just about over $1 billion Canadian.
Okay. Cash?
We're about 20 million cash.
Oh, okay.
Yeah.
You're actually going to complete it with some cash in the bank.
Yes. Yeah,
okay.
That's the plan. That's the plan.
That's good.
Yeah. We're fully funded to positive cash flow.
Okay. Awesome. Now, how long before you're able to pay back what it costs to build this mine?
The payback, it's at today's gold price, man, it's about 2 years, and it's just over 2 years if we use a conservative $2,000 US dollar gold.
Okay.
Yeah.
Okay. And right now we're sitting about 2,400, so
yeah, exactly.
Likely to go higher.
Exactly.
Fingers crossed.
It's it's actually a very you talk about challenging kind of operating environment, but because of our experience and also that challenge is sort of in the early days when you don't have a lot of traction on the ground with kind of that slippery mud that gets really hard to operate in during high rainfall. But after that, it's a really simple open pit. It's all of the resources going to be contained in one single open pit as it stands now. And we're doing owner mining. It's a relatively low strip ratio. We have about 2.4 to 1 strip ratio in the first 5 years. So all of those factors combined. Oh, and also we are connected to the national grid, which is fed by hydropower. So we're paying about 6.5 cents per kilowatt hour for our power. Exactly. So all of those factors combined make it a very low-cost mine. So we're looking at all-in sustaining cost of just about $700 an ounce. So at today's gold environment, so we anticipate to be generating a lot of free cash flow, and yeah, exactly. So we're really looking forward to it.
Okay, awesome. Ownership. So very little of this is available to retail. Probably about 25% or so is available to retail. There's a lot of big names, a lot of institutional ownership. What's the general breakdown? Not exact, but
yeah, sure. As of today, La Mancha is a 25% shareholder of us. They are a large private equity fund out of London, manages Egyptian billionaires' money. for the most part. And Eldorado Gold still has 17.7%, and they've done really well with selling us the asset and maintaining that ownership level. And Franco-Nevada has 10% of the equity in the company.
Okay. And the Lundins, do they have?
Oh yeah, so the Lundin group, it's not the Lundin Mining, it's the family offices of Lucas and Adolph. So it's they own about 3% still.
Okay. Okay.
Yeah. And we're starting to see, and what's interesting is, we had very supportive founding shareholders, such as obviously Eldorado Gold and the Lundin Group, and ASA, Merck, Franklin Templeton, CI, all of the kind of who's of the resource, and the Sprott group as well. So all of the who's in the resource investment space. But recently we're starting to see a little bit of a changeover in that generalist, large funds, such as mutual funds, pension funds are starting to come into our name as well. So we recently discovered, T. Rowe Price, which a lot of people probably have their investment, their retirement savings with. They have become a large shareholder at over 2% ownership now, and they bought all of that on market.
Okay.
So it's really interesting for us to see that generalist investors are starting to take interest because of the anticipated cash flow that we'll be generating.
Okay, so what are the local politics around Brazil? I don't know anything about Brazil, but what are the politics surrounding that area? What have you guys had to do in the way of social rents?
Yeah, so we are in the middle of nowhere. So we are very far from our nearest local community. So there's really no disturbance to any local community or the indigenous population, except we do hire a lot of local Brazilians. So the closest town is about a 4 or 5 hour drive from us. So we are a large employer in the area. So there's a lot of interest in local labor, to get trained up on our project and have this international really experience. But in terms of permitting and all of those things, Brazil is a natural resource-based economy, right? It's a large country, has a lot of of the in-country local kind of supply chain that's already in place. And so we actually find that operating in Brazil has been a real pleasure for us, because they have all the regulations, all the laws already in place. So all you have to do is just follow the prescribed procedures and get your permits. So it's a very predictable operating environment for us. So so we've really enjoyed being in Brazil.
Okay, a lot easier than California.
No comment. A lot easier than some places in Canada as well.
Yeah. Okay. So you guys aren't having to build schools down there or anything to appease the locals?
Well, so it's not to appease them, but we do want to leave every place we enter better off than when we first got there. So we do have a social program. So actually a part of the funding package that we have with Franco-Nevada actually stipulates that they will contribute $1 million over 4 years on social and environmental programs, and I think half of that money is earmarked to reforestation. Because, like I mentioned, we're in the middle of the Amazon jungle. So and then the other half is earmarked to community efforts, such as building schools. So the schools are already there, but we help them get set up on internet. So right away, all of a sudden, over 2,000 pupils now have access to, vast amounts of, information and knowledge. So that type of, high leverage activities we like to, help the local community with.
Okay, yeah, it keeps them from coming back later. All right, so we've talked about a lot of headwinds, or I'm sorry, a lot of tailwinds. What are some possible headwinds to the project? What could go wrong?
To Tocantinzinho or to Oko West?
Let's start with Tocantinzinho, and then we'll move on to Oko West.
Yeah, what could go wrong? Honestly, I think a lot of the challenges are now, thank goodness, behind us, because, as you would know, there are just so many uncertainties around any mining project, and especially when you're in a remote place like that. Like from the exploration stage, could you get a permit, or could there be a mishap, happen with your people on site or equipment, or things could get delayed. And so we did have some challenges as well, such as a couple of big pieces of equipment got delayed on the way to site, but the advantage of our business model is what we call it self-perform, which means we hire all of our own employees, and our direct hire the contractors employees as well, so that and we manage our projects all in-house instead of carving out each work scope to different contractors, who all then layer on their own profit margin. They will charge you kind of scope change fees if there's any changes to your project plan, or standby fees if there's any delay in people or material getting to site. The way that we do things eliminates all of those things. So when I say that we did have a couple of pieces of equipment get delayed on the transport, then our project managers and our engineering managers and construction people were able to meet up together and basically rejig parts of the project plan, and then apply the people that are supposed to be installing that piece of equipment to doing something else. So that's another reason why we think we're ideally suited to developing these types of projects, especially in places where you don't have a lot of access to local kind of skilled labor nearby.
Yeah, okay. And what about Reunion Gold? You guys just acquired that. What are some possible headwinds that you guys are foreseeing? What could go wrong with that?
Okay, so yeah, in the late 1990s and early 2000s, Louis Gignac Sr., who's our chairman, another principal of G Mining Group, actually ran Cambior, which owned the Omai gold mine, and that was in Guyana.
Okay.
That was one of the first gold mines in Guyana. So we actually have, boots on the ground experience in Guyana.
In Guyana.
Yeah, not only just the Guyana Shield, but in country. So we do have a lot of confidence in our ability to meet the challenges there. And actually, one of the challenges I can see is not actually from the project itself, is from the fact that there's a little bit of noise from the saber rattling, from the Guyana, the neighbors to Guyana, kind of disputing some of the boundaries, and I think it's causing some investors a little bit of concern,
okay,
or maybe not familiar with all of the history and the situation. So I have been getting some questions from investors and saying, okay, well, how are you guys? How comfortable are you guys with the safety and security there? And to that I say, we're very comfortable, because it's kind of a, the border has been determined for over 100 years. This is sort of being carved out in the late 1800s.
Okay. 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 So with wrapping up, there's and I'm just spitballing here, but we could see a scenario where this is a family that has built several prior mines in very similar terrain, very similar weather in this tropical environment, right? They just acquired. So normally when we get to the project where we're just about to go to first pour, we've probably seen most of the performance of the stock from a shareholder's perspective, right? And then you have to wait for the cash flow to start coming in and then ramping up, right? However, now they've acquired Reunion Gold, right? A very similar project, kind of in the beginning stages, like Tocantinzinho was, right?
Yeah, we'll call it TZ just.
TZ, thank you. Yeah, I've been rehearsing that one, and I'm just can't get it out. They've acquired another one, right? So it's kind of like this perpetual, bulldozer that's just moving through. And there's also projects around Reunion that could possibly be some headwinds. The Lundins own a decent portion of G Mining. I think there could be some real headwinds here going into the future. Does that make sense? I don't know how much you can say of this, kick me under the table, but...
Well, so it is a good point what you talked about. Companies are typically reaching kind of peak valuation as people are anticipating sort of a successful ramp up to commercial production and nameplate production. So if we kind of go back to theory a little bit and we think about the Lassonde curve that everyone kind of looks at, right? So the speculation during the exploration stage, it's a lot of excitement, and then it's kind of quiet. People are waiting to see how successful your mine development and how dilutive your project financing is going to be for shareholders, and so that's where you enter that orphan stage a little bit, and then people get more and more comfortable in how successful you are in developing the mine, and then sort of the value goes up, and we definitely have seen that play out very well in our story as we, prove to the market and, at each stage how much the project is complete. You mentioned earlier that the last announcement had said the project is 97% complete. So actually, I think in that same press release, we also announced that we had started feeding ore through the plant. So yes, when you look at kind of a mining asset, the net asset value is going to be at its peak just as you kind of finish construction and before you start depleting the asset and the value kind of starts going down, right? So which is why this acquisition of Oko West, the project from Reunion Gold, for us it's really ideal because then we're layering on that next sort of curve, right? Instead
kind of starting a new one.
Exactly. Instead of letting the net asset value deplete, we're adding another almost 6 million ounces. Oko West has over 4 million ounces in indicated category and over 1.5, I think it's 1.6 million ounces in the inferred category. So you add that together to what we have today. It's and we'll be able to finance that the construction of that project with the cash flow that's anticipated to come out of TZ, as well as perhaps low cost bank loans or revolvers and things like that. So we anticipate there to be very minimal, if any at all, equity dilution going forward for shareholders. So that's, because we're shareholders first ourselves as well, right? So we operate this company, from an owner's perspective. So
you have a vested interest in seeing it do well.
Exactly.
And with acquisition of Oko West, I can imagine that might bring you guys to the size where funds may be interested.
Yeah, like I said, we already are seeing generalist funds come in, such as T. Rowe Price. We've spoken to some of the other larger, not private equity, but pension funds and mutual funds as well. There are some funds in the Canadian space that maybe your audience wouldn't be as familiar with, but they've also started to come off the sidelines because they typically like to value things differently than the resource investors. You know, you and I, we talk about price to NAV ratio,
Yeah.
right? And the generalist funds like to talk about, you know, EV/EBITDA ratios, right? So they like to kind of go, okay, well, I like to use 5 times, you know, EV/EBITDA ratio, and then so what's your company worth to me, right? So we're starting to see that in meetings, a lot of people are starting to, you know, kind of do that back of the envelope calculation, and if you look at the anticipated, you know, pro forma production profile, once Oko West is built in a few years, then yeah, it's going to make G Mining a very interesting company to your point earlier about the major companies maybe being interested in us, but also the large funds.
Yes. Okay. If anyone wanted to get a hold of you, learn more about G Mining, how would they do so?
Yeah, so you can reach me easily at info@gmin.gold.
Okay.
So GMIN.gold.
Okay. There'll be a link down in the notes below. Jesse, thank you very much for coming on the show.
Thank
this was
you,
a
Steve,
real
for
pleasure.
having me.
And thank you for tuning in. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.